We are entering a time in this nation where we are beginning to see the fissures really spread out. And when I talk about fissures, I'm talking about the cracks that we are beginning to see in this system in the United States as far as our currency is concerned. I'm sure many of you guys are aware already that the Silicon Valley Bank closed, and it's the second biggest bank failure in US history. So this just took place yesterday. This is something that's very concerning to a lot of people because they are a key part of the tech ecosystem, right? So what they did is this banking system was one that actually allowed many of these startup companies, especially in the tech industry, to go ahead and take out these loans. And now that they are in this position where they have closed, there's a lot of these people that are being impacted by this that may not be able to get these types of loans going forward. And as we know, there is a great big issue within the tech industry with all of the massive layoffs and everything else that are happening. So a lot of these startups and things are going to have a very difficult time finding that funding that they need. So the reason I wanted to touch on this is because I feel like this is very telling of the direction that our nation is going. A lot of people, the FDIC has actually stepped in to try to regulate this banking system. Nobody knows for certain exactly what this is going to look like, if the depositors are going to be able to get all of their money back. A lot of these, the banks served these tech businesses. Many of them had much higher amounts of money stored than the $250,000. So there's no telling if they're going to be able to get all of that back or not. And it's going to leave a gaping hole in the tech industry, like I said. So no bank, they say, has understood the startups in tech the way they do, and they've had a 40-year reputation. So that's very telling about the damage that this is going to do. It obviously caused the stock market to drop. And what I wanted to point out is that, if one banking institution, this one is, larger obviously than Silvergate, but it's not, as large as, say, a Bank of America. And if we're already seeing this kind of an effect from a smaller banking institution like this, then what's going to happen if we had an even larger bank that, flounders? So it's something to be thinking about. It's something to pay attention to. And I would really encourage all of you guys to begin to get your ducks in a row. If you haven't finished finalizing your plans as far as preparedness goes, make sure you don't have any major holes or gaps in your preparedness plan. Make sure you have adequately done the math calculations for how much food and water that you feel comfortable stocking up on for your family, making sure you have those covered, that you have some sort of home defense, that you have figured out your heating and your cooling needs, your cooking needs. Medical, I think that's another huge one that you really need to cover, guys. So be thinking about these things. If you are concerned about, your bank going under, that is another thing that you need to be thinking about. Make sure you have some cash on hand. It may not be, you may not be able to pull out, a lot of people will advocate for you guys pulling out 6 months or more of cash. Not all of us can do that, right? And one of the things I've always wondered about is, if we got to that point, who would actually be covering all of those bills anyhow? And if we had a situation where we were no longer able to even get utilities or services like that into our homes, and I don't think that we would be paying those kinds of bills, but I would at least have cash on hand for emergency type situations. If you had a situation where you had to evacuate quickly, you needed cash to, cover a stay somewhere, or you needed cash to acquire to be able to, even rent a U-Haul or something to get out of an area. Those are things that we need to be thinking about. Having money on hand for emergency type purchases is always a good idea. So there are many reasons why. And, even if the system were to collapse quickly, if this was to start to escalate, you're still going to have a period, a point in time where cash is still going to work. It's still going to be received. It's still going to be able to be used. That does not mean that these products won't go up exponentially. So ensuring that you have enough to cover that, understanding that if this, were to get out of hand, that these goods and things, if we think we've seen inflation now, things would be drastically overpriced. You might see a situation where, something as basic as a loaf of bread was easily going for the $10 to $20 price range. So we have to be aware of that and be prepared to handle those situations situations. I would encourage you guys to continue to diversify your assets. Do not keep everything in any one banking structure. Credit unions, I feel like, are a safer bet. Really make sure that you've kind of spread that out if you have, the ability to do so. The other thing is making sure that you do have some precious metals. If you have, some money saved up and you feel like that's something that you're interested in, I would encourage you to do some research and figure out if precious metals are something that you would want as a hedge of protection for your family. That is going to be a better bet, because that has, kept its value, and all of the thousands of years in this world, that has held its value. So it's something to consider. If you don't have a lot of money to do something like that, there is, silver is a cheaper option than gold. So that's something to think about. It's something to definitely consider. Says many banking regulators are confident that this contagion will not spread to the financial sector more broadly because of the rules that went into place in the 2008 financial crisis that is going to ensure more stability. I don't know that I necessarily agree with them, because as we've seen, people have panicked, and we've already seen, a situation where this has just gone under. Apparently, this bank has a presence in 9 countries. And something else I wanted to touch on is that my husband had actually received communication. He works, I can't tell you where he works, but and what he does, he had received communication from a company that they do business with, that had said, please quit sending transactions to this banking institution. We are looking for a workaround. So he had been contacted where he works concerning this. I have also received an email from a subscriber talking about a local grocery chain, I guess that's on the East Coast, called Wawa, and how he was unable to access their ATM machines there, that they were grayed out as far as his ability to make any sort of withdrawals. And apparently through his connections, he was able to determine there in Virginia that all of these stores did not have that function available to people, that those ATMs are not being able to be accessed. This is something to keep in the back of our minds, because it makes me wonder if this crisis is going deeper than what they want to admit to, right? So they're going to continue to try to, brush this under the rug and try to, tell us that it's not as bad as we see that it is. And I think that, this is only a harbinger of sorts, right? What we're seeing. So I did want to touch on this other one. It says venture capitalists are actually blaming each other for triggering this disastrous collapse. So they say that nearly 25% of the bank's $161 million in deposits were withdrawn. So they had a bank run of $42 billion. And a lot of that, they say, is because these venture capitalists went in. The SVB executives say that they had a meeting, and then the stuff got leaked, and then everybody ran out and just started pulling all of their money. And they say, although the SVB CEO, Greg Becker, tried to calm these top venture capitalists on this phone call, he conceded that the bank would only be in trouble if everyone started telling each other that it was in trouble. And that's exactly what happened. It's kind of, they say they equate it to like in a movie theater, if someone yells fire, then everybody is going to rush out that door. And they did put in here that, would you congratulate yourself on being the first one out while other people were left on the floor? Would you sleep well tonight? The problem with this, guys, that I see, is that they're saying that this caused all these people to panic, and then they went and they had the goal of protecting themselves and their own companies over the goal of keeping the financial institution alive. And I think that's wrong thinking, because in a free market, you are supposed to be more concerned about protecting your own company and its position, right? I mean, anybody would be. And so trying to blame all of these people for going out and making a withdrawal, they say in here that it's the company's job to convince them, the market, that there shouldn't be a panic, not the fact that they decided to take all those losses without some sort of a financing solution in place. And now they're blaming the market, right? You don't blame the consumer for taking the money out of the bank. And I agree with that. This is coming from one of the leaders of these venture capitalists who left this quote with Forbes, and I think that's accurate. I'd love to hear what you guys have to think about that. What are your guys' thoughts? Should we be more concerned about making sure that the financial institution stays in place, or would you be more concerned about just covering your own bases and making sure that you had your money out? I think most of us are going to be concerned about having enough money to take care of our families, right? I think that is only common sense. It's that's how a lot of us operate, and it's not because we don't care about this financial institution, but I would like to know what financial institution really truly cares about those in the community. They're in a business to make money, right? I think that at the end of the day, that's exactly what they're in the business to do, and everybody is going to be trying to cover their own tail. So the other thing I wanted to talk about are these CBDCs. So there's a lot of conversation and talk about the central bank digital currencies. I did want to touch on an article from American Banker. So this is still saying that it's in debate in the U.S. about whether or not there will be a central bank digital currency in America. It says that the Federal Reserve Bank of New York's Innovation Center and the Monetary Authority of Singapore are working on an experiment that will determine how wholesale central bank digital currencies can improve cross-border payments. They are designed for large parties to move substantial amounts of money and are considered more likely to be implemented rather than retail CBDCs, which are designed for consumer use. They were also working on a second project through the New York Fed. They're participating in this proof of concept test that will determine the feasibility of digital currencies operating in a network of financial institutions. They have BNY Mellon, Citigroup, PNC, TD Bank, Truist, US Bank, and Wells Fargo are participating in this along with MasterCard and SWIFT. So this is an ongoing experiment that's taking place. The other thing that is definitely probably going to be coming rolled out this summer is this Fed Now program. So I did want to mention that that is what is at the forefront. There is a congressman that is talking about how this digital dollar may increase financial control. I think we have touched on that several times, that all of us in the community feel that way, because if you centralize these, if they go through the central bank rather than these other financial institutions, and that means the federal government is in control of these, and they're going to be able to force us to comply to their will and what their mandates are, with any sort of stipulations there, right? As far as how we view the world, how our choices about what we inject in our bodies, all these sorts of things could come into play. Our social credit scoring system that would affect our ability to continue to participate in society as far as monetary exchange. So that is something that really needs to be considered. But the Fed Now coin is the one that is supposed to be coming out this summer, and that is going to be the first backed coin that's backed by a government, rather than just all these different financial institutions. I think it's something to be aware of. I think it is just one step closer to these central bank digital currencies. Now, how all of that is going to work is anyone's guess. Of course, they are trying to, entice everybody with it, because it's going to be a faster paced. You're not going to have to wait on, the traditional wait that we've had for larger payments that you're receiving in your bank accounts. There won't be those holds. You'll be able to get that money and access it more quickly. But I just want to know what exactly it is that they are trying to back this with. If we're trying to say, well, it's because, this is the federal government that's backing this, they're a paper tiger at this point in time. And if people can't see through that, I wouldn't want them, necessarily backing all these transactions. I don't see what validity that really has. When you look at our national debt calculator, you can see that we're already at $31.6 trillion in debt. So what is this truly being backed by? You know what I'm saying? That's where I go with this. And I don't see how this is going to help anything at all. So I'd love to hear what you guys have to say about this. What are your thoughts? Are you guys thinking that it's time to start accelerating your preparedness? Really make sure that you have everything in place. I'm not encouraging any of you guys to go out into debt. I don't think that's a wise move. But if there's things that you have been putting off, there's purchases that you have been putting off making, and maybe you've already set aside the money to complete those, but you just haven't pulled the trigger yet on those, and you have been, slacking in a certain area because of timing or because you had other things that you wanted to do first, I really want to encourage you to consider your family, consider what level of preparedness you are at. And if you feel comfortable, if we were to start seeing this falter, if we were to start seeing a domino effect where the stock market began to collapse and you started seeing larger bank runs, just be keeping that stuff in the back of your mind. Understand that, this may absolutely go nowhere, but it very well could be just the tip of the iceberg, and we need to be aware of that, and we need to be making plans to take care of our families. If you guys have enjoyed this video today, please give me a like, share, and subscribe, and remember to pray, prep, and put God first. God bless.